Talk about the targets on the equity markets for the year end. What is it that you're penciling in when it comes to the Sensex and the Nifty rhythm?
So I think the context here is that India is amongst the top 5 equity markets in the world. So it's not a small cap stock in the global context. It's a large cap place. And we are not so constructive on some of the large markets around the world. So especially in the US, where we think that stocks may go through a painful period. We are positive on Japan, and that is certainly a comparison for India. But when I look at what my co-strategists are forecasting for their respective markets, I think we still have a return expectation on India that is largely higher than all of them. So I think we can expect a pretty strong return for the rest of the year going into next year, maybe in double digits. And I think it is possible that the market walks into 2024 and starts pricing in a majority government. And if that happens, then I think we will witness pretty strong conditions for the equity markets, at least until some signs of where the election results are going come through.
What are the risks, though, to your bull case target of 80,000?
No, there are plenty of risks. I mean, we should not focus on the bull case. We should focus on the base case. But anyway, there are a lot of risks on the horizon. We have to first deal with the immediate weather problems that we may face, the prospects of an El Nino and depressed rainfall. As such, I don't think that will have an impact on the economy unless the rains are really bad, something like 15% below normal, which is not the current forecast by any agency. But we have to keep a watch on that. We also have to keep a watch on how global growth pans out. There have been steep increases in interest rates over the past few months, and there will be impact on global growth. While at Morgan Stanley, we don't think the Western Hemisphere is slipping into recession, growth is going to be pretty sluggish. And our fourth quarter 2023 GDP growth forecast for developed markets is like 0.5%. India exports more than 20% of its output. So there will be some effect of that. And growth is likely to be slower than last year, as is evidenced by our forecast. So that's another challenge which we have to face. There will be a fair bit of political news flow. There will be state election results that will come, and the market will probably react to such events on a short-term basis. And of course, then the big elephant in the room is what happens in the general elections next year. And we don't know what happens. And if the country chooses to put in a minority government which is less stable, that will also leave some impact on the market. So there are enough risks to ponder about.